Do you want to pay less in taxes? Of course you do. This is America. Everybody wants to pay less in taxes. Well, I'm going to tell you strategies that can reduce your tax bill and grow your wealth at the same time. In this video, I'll share powerful tools that you can use to save on taxes now while planning for a more secure financial future. I've worked with countless individuals and business owners to optimize their taxes using these investments, and I'm sharing the best strategies with you today. I'm Brad Paladini, a tax attorney with over 12 years experience helping clients keep more of their hard-earned money through effective tax planning. The first strategy that we're going to talk about is a simple one, and it is overlooked by so many people. So many people contact my office and want to pay less in taxes. And one of the first questions I ask is, well, how much are you contributing to your retirement accounts? And the answer most of the time is nothing. So this is a quick and easy way to reduce your tax bill. You can set up an IRA very easily with any of the big financial investment firms like Fidelity or Vanguard, and you can contribute to it immediately. The contribution limits vary year to year, but it's usually around $7,000. What does that mean? Well, if you are making $100,000 of taxable income, you are paying taxes on all $100,000 of that income. If you were to contribute $7,000 to an IRA, you are now only paying taxes on $93,000 of income. Pretty immediate savings. Now, if you are self-employed or you work for someone, you may also have the opportunity to contribute to a 401k. But it works the same way with different contribution limits, where that $100,000 of income that you make every year, maybe you're only taxed at $80,000 or so after contributing to a 401k. Now, it's not either or. You can contribute to a 401k and also you can contribute to an IRA as well. So if you do the two of them, maybe you are lowering your taxable income from $100,000 all the way down to $70,000 or so. It can really make a big difference. If you are self-employed, you have your own business, you could set up your own 401k. There's other retirement vehicles as well that might be appropriate, but they work more or less the same way. I also briefly want to mention Roth IRAs. So a Roth IRA is slightly different than a traditional IRA. If you contribute to a Roth IRA, you are not allowed to deduct that amount. So going back to the example, you have $100,000 of taxable income. If you were to contribute $7,000 to a Roth IRA, you're still going to be paying taxes on $100,000 of taxable income. But what is the benefit? The growth on the Roth IRA is tax-free. So if that $7,000 that you contribute becomes $10,000, $12,000, $15,000, you are not paying any taxes on that gain. Pretty big benefit. There's lots of disagreement about whether an IRA or Roth IRA is more appropriate, more beneficial. You can kind of fudge the math any way you want to make one better than the other. Just contribute to a retirement account at the end of the day, whether it be a Roth IRA, an IRA, and or a 401k. A second way to lower your tax bill is to contribute to a health savings account, an HSA. Here's the best part. An HSA isn't just for healthcare. It is really a powerful tax saving tool that many people overlook. It offers a triple tax advantage, which is pretty rare. So contributions to the HSA are tax deductible. The growth is tax-free, kind of like a Roth IRA, and withdrawals for medical expenses aren't taxed. Again, pretty rare that you get the triple tax benefit. Your contribution to a HSA varies depending on your filing status and income, but you can save a little bit of money in taxes, have a little bit of tax-free growth by contributing to one. The third way to reduce your tax bill is real estate. Real estate isn't just about passive income. There's a reason why the very rich love real estate. It provides many different tax benefits. So if you buy an investment property, you are able to deduct all of the property taxes, all of the maintenance that goes into the property, and also depreciation. This alone can often offset all of the rental income for that piece of real estate, giving you a nice tax deduction. Now, there are limits to the tax deduction. depending on whether the real estate is active or passive. But at the end of the day, you do have the opportunity to save a little bit of taxes by investing in real estate immediately. Long term, it can offer some pretty big benefits. So if you were to buy a piece of property for $500,000 today, that increases in value to $1 million. Ordinarily, if you were to sell the property, you would pay capital gains tax on the $500,000 of profit. With real estate, you have the opportunity to do a 1031 exchange, which basically defers the capital gains into the future. So you buy that piece of property, it increases in value, and then you sell that property and buy a bigger property for more money, and you avoid paying the capital gains tax for now. So really big benefit for real estate investment. Again, that's why the rich love it. If you want to get into the real estate game, there's certainly a lot that goes into it. It's not an easy investment, not as easy as putting money into a Vanguard mutual fund and forgetting about it, but there can be pretty big tax savings there. Another option I really like, especially if you have kids, is contributing to a 529 plan. Now, a 529 plan does not provide an immediate tax deduction. It doesn't work like a traditional IRA. It works more like a Roth IRA, where if you were to put money into a 529 for your kids, all of the growth in that 529 plan is tax-free so long as the child uses the money for education expenses. So if you have children, especially young children, and you plan on trying to help them out with college one day, you can put the money into that investment now. If they're really young, I mean, that could grow pretty substantially over 10 or 15 years. And if they do decide to go to college and use that money for education, all of it is tax-free. So again, no immediate benefit to you, but it can put your children in a pretty good situation come college time. Another opportunity to lower your tax bill is reinvesting in your business. Ordinary and necessary business expenses are tax deductible. So if you have a growing business, you can try to get it to grow faster by investing more in it. You get the immediate tax deduction, and if you are investing that money wisely, the business is also growing over time. Again, some of the wealthiest people out there are business investors. That's kind of how they make their money. And they also get some nice tax benefits as well. Last but certainly not least, charitable donations. So look, this is kind of a win-win, right? You can give to a charity that not only helps others, but also helps you reduce your taxes. You can donate cash, appreciated stock, or other assets to provide tax deductions while supporting causes that you care about. If this video is helping you find ways to lower your taxes, hit that like button so more people can learn these strategies. If you want help creating a personalized tax savings plan, click the link below to book a consultation. My team and I focus in helping people maximize their savings through smart investments.